What is good, guys? It's Rey-Jay back with another video, and in this one I'm going to be talking about the SPY, the Nasdaq, the QQQs, and the futures. Break down what the charts are telling us right now and what you should be watching for the future, and talk about why I believe the market does have a little bit of upside left. It's going to try to push up one last time, and it's likely going to get a big rejection, and we do have some more downside to likely come in the nearer term future. Now, before I break anything down about that, before I talk about why on earth the charts are telling us this, what's going on with the technical indicators, I do have to mention a couple of things before starting. Firstly, I'm not a financial planner. Make sure you take none of this as financial advice whatsoever. And also, if you guys can, please smash the like button if you want to see more videos like this. It not only benefits me, it benefits the entire community as a whole. And the last thing is, if you guys can, please check out the Webull link down below and in the description. If you sign up for Webull, the link down below, and deposit any amount of money into the account, you're guaranteed up to 12 free stocks, each valued at up to $3,000. And the best part is, any could be a free Tesla share. It's a limited time offer. The offer ends in just 11 days, so make sure you check it out before they run out. With that out of the way, let's get on with the video. So anyways, I want to talk about the markets, guys. We had a very interesting day. I know I did mention to you guys that I do expect us to close around max pain, a little bit down. I did think we'd close around this 405 area, somewhat in the red. We ended up pushing up a little bit higher, and that's because the market hasn't given up just yet. However, looking at different technical indicators, it looks like the bearish outcome looks more likely, and the market is going to break the low we made today. And the market does have more downside to come. So why am I saying that? Well, to start us off, the market came down. We had this nasty sell off after the Fed speakers came out and mentioned the fact that a 50 basis point rate hike is on the table for March, and the Fed has to continue to tighten, remain restrictive, because inflation is just way, way, way too hot right now. Now, I do believe that there's massive truth behind that. And I do believe there's a lot more work that has to be done. And there isn't really much fundamentally backing up the move the market has made. The market is overextended. It's been a long time since we actually saw the market pull back like this. And we did have a bit of a drop around like a part of January. But since then, for the most part, since January, the market has been rallying to the upside. If you guys just look at this trend, it's been continuing to just go up and up and up. And there, once again, is not much fundamentally backing this up. Now, part of the reason why the market was so crazy this week with the crazy, crazy sideways price action and rallies to the upside off these lows we kept on making was because of OPEX. This happened because of crazy options expirations. And finally, we ended up actually seeing more pain for the bears. They once again tried to push us up at the very end, but it wasn't necessarily that bad because we did also see lots of bears entering around this place right over here. But the bottom line is, okay, there's a shift in the market. All right, the market is not bullish like before. We're not breaking to the upside like crazy like before. We're showing some weakness. I also want to note to everyone that when looking at the charts, I do believe that the bearish outcome is not going to happen immediately. I think there's still some fight left by the bulls. I think the market makers are still holding on to their positions. And we did see an increase in individuals selling puts today, meaning that when people sell puts, they're basically entering a long position that's more on the bullish side, right? When you're bullish for the market, you sell puts. When you're bearish, you buy the puts, right? And what ended up happening was this did help prop the market up a little bit. And I do believe we're going to try to fill this gap around 408. We're going to enter the 408 to 410 zone, in my opinion. And we're likely going to fail around here because now we have major resistance around 410. However, just so you're prepared for anything, if you want to be a bull in this market, if you do believe the bulls have some potential, SPX has to break past, I'm just going to pull up the chart. It has to break 416, I believe. That's the level it has to try to break. If it breaks 416 and holds it, then yes, the market could actually make a big U-turn. We have to break this high right about here. If we fail to do so, it's likely going to continue to come down. The odds are favoring us ending up coming down. Why am I saying that? Well, there are many, many reasons. The first thing is fundamentals aren't backing us up. The second thing is we have many technical indicators telling us that, right? I want to mention the fact that when looking at the way the rally played out, we did actually not get the same divergence as before. We did see the RSI actually following the charts. There was an instance right here where we actually saw the RSI at about 54. Right here's a little high, and we did actually make a higher high. So we did cut out a lot of divergences on the daily chart. On the hourly time frame, I'm not really seeing the same divergences playing out as before. There was one right here, however. I think this was one. This was almost a divergence. We had 70 versus 78. So it was very close from this area right here. There was this divergence, but we ended up breaking the high. So even though we didn't validate a lot of divergences, we do have other signals telling us that the market is likely going to fail. Now, looking at the daily MACD, we got a crossover right over here. The RSI is starting to come down a bit, and we did actually break below the key 4,100 level. So those are the other indicators telling us that the market is likely going to come down. The market's also lacking some strength when it comes to pushing up. The same thing could be said about SPY. SPY is actually not holding these levels like it was before, and it looks like a downtrend is beginning to continue. We've been respecting a downtrend this week. I do believe it's going to get worse going into next week. Looking at Tesla, Tesla actually has some relative strength that's up 3%. However, Tesla is actually forming some divergences which are quite bearish looking. I'm saying this because on the hourly time frame, Tesla has an RSI of 74 on here, and then it reached 73 on this peak. So we made a higher high right here, right? See how Tesla pushed up during the second peak, it's higher, but the RSI went lower. We made a lower high on the RSI. That's often a signal for a bearish divergence. And we can see the same thing actually happen right here on our MACD. If you look at the PPO, very similar uh, uh, occurrence. This is basically telling us that Tesla is likely in a topping process. And I wouldn't necessarily just be buying way up here. I'd be very patient with it. On the daily time frame, I want to note that I think we also formed the same thing. Let me just hide my drawings. I know I have a lot of support levels for it. We also have a bearish divergence, hidden bearish divergence that developed on Tesla because I saw the RSI at, let's see, 72.5. Then it reached 77. Then it reached 73. I'm seeing that right here, the high in Tesla was about 214. Then we hit a new high of 217 yesterday. But the RSI is coming down, right? It's not the same as the chart. This is often a signal to me that we're in a topping process and this thing might have some downside coming. Do I think it's going to happen immediately? I think we're going to get one more push. I don't know if we're going to break our high, but as long as this divergence holds, the odds are favoring Tesla coming down in the future. Looking at Meta, I think Meta is a very, very good short. We do have this gap. I was actually looking at the fib levels recently, but when you look at the gap right here around 150, Meta, in my opinion, it's very likely that it's going to be testing the 20 moving average on the daily, try to balance off this 160 area, try to hold it, and likely it's going to start failing and start coming down to 166, fail there, then come all the way down to 158 over the next few weeks. Then we have this gap way down here. It's a very good short in my opinion. The same could be said about Microsoft. It's actually showing some relative weakness. We also formed, I think we formed a divergence. Let me double check it. Yes, yeah, we did. We formed a divergence right here, a hidden bearish divergence, and we are coming down. I'm looking for a small bounce on Microsoft first. We could try to get back around 261, then come right back down to fill the gaps below, all the way down to lower 250s. I could see that happening. For Aapl, Aappl's also forming on the daily. We have another divergence that formed because right here the RSI is a lot higher during this time frame. The RSI is at the same level, if not a little bit higher, despite the fact that Aapl made a very similar top. And on top of that, we're seeing the daily MACD starting to close on Aapl. It's not showing the same strength as before, just like SPY. So I am seeing potential for Apple to continue to first try to get a push to fill its gap. Maybe it's going to drag the market up. Then it's going to continue and fight for that 150 and likely break below it and fill its gap all the way back down to the 140s. That's the move I'm seeing on Apple. One last push before some more potential downside. On the triple Q, very similar structure. Apple and Tesla might drag this thing up, fill this gap up here around the 303 area, trade sideways, chop around 305 to 300, then come right back down into the 290s, all the way back down to 294, and then even lower than that potentially as the weeks pass. Once again, I'm seeing that on there. The VIX closed above 20. That's a pretty decent sign. We actually closed above the falling wedge on the daily time frame, right? We broke out of the falling wedge. We are chopping around a bit because of market maker manipulation, but we did close above it. That's a decent sign. So if the VIX gets a nice bounce, I think it might come down to retest this upper part of the wedge first and then get a nice bounce. But either way, it's breaking out and the odds are favoring the market coming down as a result. The dollar hit 104.67. It did end up coming down a little bit, still closing kind of green. The dollar is looking strong. It's going to likely continue pumping for 105. Once again, bearish signal for the stock market. Finally, last but not least, I like to constantly talk about the 10-year Treasury yield. I don't talk about too many of the yields, but I just like to talk about this one in particular just to keep it simple. On the daily, the MACD is wide open. This thing is still continuing to pump, and we also formed, I think we formed a bullish divergence. I'm going to double check this for you guys. Sometimes it's a little hard to see. During this low, the RSI was at like 37 to 38.4, and right here it was at about, looks like it was at 40. That's very interesting. So the RSI formed a higher low, but the 10-year Treasury yield formed a lower low right here, right? Right before it took off. This marked a bullish divergence, and this is part of why this thing continued to rally to the upside. We have this gap. I think we just filled it. I think we have more gaps above. We are at some major resistance around this 39 area. So I do believe it's going to slow us down just a little bit. But like I said before, I do believe this thing is going to continue to rocket, and we should see this thing above 40 over the next few weeks. That's once again another bearish signal for the stock market as the bonds market is already pricing in a more hawkish Fed. All this is telling me the same story. All right. The market is going to get one last push, in my opinion. I think the market makers might try. I think some people are still buying calls. They're not giving up yet. 408 to 410 is likely going to be the top. If we are going to go higher, if you want some hope for the bulls, SPY needs to break 415, break and hold 415. As long as we don't do that, it's very likely that we're going to continue to see downside, and we will eventually break the low here. The odds are heavily in the favor of that happening later on. I do believe we're going to break below 404 and retest 400. I think it's going to happen within the next 2 weeks, maybe as soon as next week. It really depends on what the market makers try this time, but the odds are favoring that. And if we break 400, I'm going to be watching 395 to 390. That could come too and help drag the market down. So I hope you guys are prepared for this. I know the market's very overextended, and the odds favor more bearish price action to come. Thank you for listening. Have a great rest of the day. I want the best for everyone. Remain calm, cool, and collected, and enjoy the weekend. Please remember that the stock market is going to be closed on Monday, and I'll see you guys in the next one. The market to the moon because the long-term future is still incredibly bright, and peace out.